Every transaction has a story, and if you're running a business, value-added tax or VAT is part of that story. Understanding how VAT impacts both your pricing and profits is crucial for any business owner. Let's delve into what VAT really means for you and your enterprise. VAT is a consumption tax and applies to almost all goods and services that are bought and sold for use or consumption. As of now in Nigeria, the standard rate is set at 7.5%, a slight increase from the previous 5%. This change affects every level of your business operations, from purchasing, supplies to selling your products or services. The beauty of VAT is in its multi-stage system. It's charged at each step of the supply chain, with businesses collecting the tax on behalf of the government. However, it's not just about collection. Businesses also pay VAT on their purchases, which can be reclaimed, balancing the equation.
So, for VAT, is multi-stage. At the point of production, you buy raw materials, you get services. All those things has VAT implications. Now, when you buy raw materials that are VAT, the VAT becomes what we call input VAT for production. So that your cost of sales is what determines your input VAT element is on your cost of sales. If you import, you also import and you pay customs duties. On that customs duties, there are some charges and VAT elements. So those VAT you pay at the port, importation, you pay on your raw materials, you pay on even some services you get to be able to produce whatever you're going to eventually sell to the market. Is called input VAT. It's not all VAT you pay that qualifies for input VAT. We need to also be clear about that. We have VAT that is paid on overhead, which is also part of the cost you incur as a business. That will not qualify for input VAT. The input VAT we are talking about is the VAT you pay on your raw materials or goods that are used as input into your production process. So when you have that, you need to have your good records. Your records must show that for those cost of goods that as VAT, you can show the VAT you pay. The documentation must be very solid on that, because you can't just claim without proving it in the event of a review by the tax authorities. So that's the first stage. Now, let's say for instance, you have some other thing like spares that you use for a bit of production machine. Those VAT you pay on those spares do not qualify for input VAT, so you expense them fully. Now, you move to the second stage. You put these things into the production process and you change the form. It becomes your finished goods. At the point when it becomes your finished goods, you're ready to hit the markets. You want to hit the market with a packaged product. Now, part of the cost of the packaging has input VAT in it, has VAT in it. So you need to put all this together. When you're not going, you determine your price. You must also be able to cover your costs, put your margin, everything, you get your sales price. On top of that sales price is your output VAT when you're selling to the market. Now, when you charge VAT on your finished product to the consumer or whoever wants to take it off you, maybe it's the retailer, maybe it's the distributor, whatever, the VAT you charge is the output VAT. You must also be able to get that and show it on your invoice, because the invoice will be the basis to show that you charge VAT. So you've actually incurred input VAT, but mind you, you did not use all those products for the particular goods you're selling. So you're still having a portion that is there sitting down in your input VAT account. The only input VAT you can claim is the one that you've already used for the production they are selling to the market, so that you match properly. Now, the input VAT you paid on those costs for that production, everything used for that production, you now have to fill your VAT form and you disclose them and offset against the output VAT you charge to your customers. The net is what you're paying to the government. So there's some adjustment that needs to be done. Maybe you have you sell to an industry where they're not going to pay you the VAT but they're going to withhold it, like oil and gas. At that point, you must show that out of my total sales, 30% of it or whatever went to oil and gas industry, VAT not paid. So you come to your VAT form and show that adjustment. Now, that's on the consumption stage by stage side. Now, when you get to the market and it's taken off you, there's a level between the consumer and the producer. Now, I'll tell you, those are the distributors, wholesalers. They take it wholesale, and they are the one that will end up getting it to the retailers or to the ultimate consumers. At that point, they also have a multi-stage VAT, which they don't know. So most times, people just think when you buy. As a distributor, I don't have VAT obligation. You do. Because if you look at the invoice, whatever you're selling is your selling price. The invoice will have the VAT on it. You have taken it up and you have sold. Now, where there's always a problem is that at times, they get what they call a rebate or a reduction in price or a discount. When they get that discount, they must be able to account for the VAT element on that. When they are selling, they must also show, because what you get on the discount means that what you paid is less by that discount. Maybe products that they say, okay, buy one, get two. You understand? You pay for one, you get two. So definitely you have to do your valuation so that you be able to account for the proper VAT on what you buy. When you're selling, you need to also know the VAT elements in the price you're selling. Because at times, they will tell you, this is especially if it's a control price, they tell you the price in which you're going to sell. So you must be able to account. Where you now have a situation whereby your VAT you have paid at the point you bought is less than the VAT you have charged when you are reselling, you must also account for the VAT payable to the government. But let's assume it's the reverse. You end up having to suffer VAT, you have more VAT to paid on your on what you bought than what you collected on what you sold. You also need to show it in your VAT return. There's a column for adjustment because it needs to be clear. But all this cannot be defended in the absence of documentation. I always tell people that it's easy to manage tax audits. It's easy to manage tax authorities. What they want is evidence. I have bought and I have sold. Show evidence of what you bought, how much you buy it. Show what you recorded. If everything aligns, then you don't have a problem. You go your way. So VAT is stage by stage, and for every stage you must know what is input, what is output, and you must be able to account for whether you're having a payable or a refund. I know some people have gotten refund if there's genuine refund because there's an audit. You can show, you have records to show your input, records to show your output, records to show that you actually have a genuine refund. Then you're able to, so that's how it goes. Now, from that middleman between the producer and the ultimate consumer is the distributor that I've just explained. Then you now have the consumer. At the point of the consumer, you bear it all. You can't claim anything. You've bought, you've eaten it, you've eaten the VAT. So that's it. So that's how it goes. So the ultimate consumer bears the brunt. So you found out that because of the multi-stage, at the end of the day, the VAT that the ultimate consumer is going to pay is higher because you've taken account of the input VAT, value has been added in the production, and based on the value add, VAT has also come on, and then the final thing sits with the final consumer. So it's just look at the first stage you pay 5 naira. You get to the next stage, you are charged 10 naira, take 5 from 10, you have 5, and then you repay 5 to the government, and that 10 goes on again. Somebody else added something on another value, adds that, and it goes that. That's as multi-stage. So the end product sits with the consumer. And so everybody that consumes in a eatery or uses any product that is vatable pay VAT.
This balance is crucial. It means you are only paying VAT on the value-added part at each stage. But it also requires meticulous bookkeeping. Every naira must be accounted for, both incoming and outgoing, to ensure compliance and prevent penalties.
You know, it's not costly to keep documents. It's carelessness that makes us not to give documents a recognition. I know we're still going to, See, VAT and withholding tax, they are like Siamese twins. People talk about them, but they are not the same. When you're talking about withholding tax, I always tell people, paper is money. Paper is money. Don't see it as something you should shred or throw away if it has to do with your transactions. That's on that side. So when it comes to VAT, let's assume you import, you bring in your ship. The shipping documents are there to show that you brought it in. It shows who you bought it from. It shows which vessel brought it to you. It shows how much you pay. It shows all the costs. It shows your customs clearance. All those documents are important. Thank God now that we have virtual platforms. We have online filings. Just get those documents. In fact, some documents come in soft copies. You don't need to spend money. Manage your fund. Don't print. Save it in a very good place. Create a space in the cloud. You know, everybody goes to the cloud now. I've been saying something that maybe very soon the cloud will not be full, but everybody goes, save it in the cloud. Make sure that you can retrieve it when you need to be reviewed. So documents is very important. That's on the side of what you buy. You bought locally. You have all your invoices. You have contracts that you've negotiated with the person. This is what I'm going to buy. Maybe I want to buy it in installment. I want to pay in installment. I want to buy it over time. All those documents, also make sure you keep them. If you decide to still be the conventional Nigerian and you have hard copy, please scan. Scan them properly. Reference them. Keep them in a shared drive, in a portal. We also have access to portals. Even if you don't have, we have Google Drive. Let's even say I'm a one man, I'm Titi Show. I have Google Drive. Put it in my Google Drive. I can retrieve anytime I need it. That's on the side of whatever you have. Same for when you sell. Your invoices. People generate electronic invoices. Make sure you have them in a readable form, such that when the review comes, you just get them out. In fact, tax authorities don't tell you to print. They will say, give us a download. So just go, download it, reference it properly. January, you can decide to use your Jan to be 01, first day, 01/01/22. Invoice, you can say by customer, ABC Limited. Have a way in which you arrange these documents serially. So when you need to submit documents to tax authority, you just bring them out. They themselves will not have a choice but to say, well done. So that's where it's missing, documentation. I was telling someone, I said, I do have a backup of my documents, personal documents, as far back as 1998. I started working in 1994, and I can retrieve some of my documents, just that I feel people might have tampered with it because at a point from 1994. So if we are good at archiving, personal archiving, and we are good at corporate archiving, we'll have less problem when it comes to defending our position.
To stay on top of your VAT obligations, proper documentation is key. This includes issuing VAT invoices for all taxable sales and keeping receipts for your purchases. Monthly VAT returns must be filed with the Federal Inland Revenue Service detailing all this data. But what about when things don't balance? Sometimes you might pay more VAT on your purchases than you collect from sales. In such cases, you are entitled to a VAT refund, a process that, while straightforward, demands accuracy and sometimes patience. Despite its structured approach, VAT isn't without challenges. Price changes, compliance costs, and administrative burdens can also impact your business. Listening to how other entrepreneurs navigate these hurdles can provide practical insights and strategies. While VAT may seem like just another obligation, understanding and effectively managing it can significantly enhance your business's financial health. It's not just about tax, it's about understanding the flow of money through your business and using that knowledge to make informed decisions. VAT doesn't have to be a villain in your business story. With the right knowledge and tools, you can turn it into a manageable aspect of your financial strategy. For more insights into making your business thrive, make sure to subscribe to our channel. Have questions or need more details? Drop them in the comments below and let's keep the conversation going. Here's to making every naira count.